Yeah, I'm losing my
Here
edge.
lows in US dollar, Pete. That is the topic of conversation here
That's a good
today.
topic to
And
have today.
yeah, absolutely. And it's I've talked about this in the past that dollars are kind of the cult classic, and especially given the election news, given the COVID vaccine news, everything that's played out in the first 48 hours of this week. Not a lot of people looking to dollars. Not a lot of people looking to dollars last week,
Yeah.
but some really intriguing price action over the last, 5 or so trading sessions, and some really unique opportunities as we get into the current trade. Because Pete, USD hit new lows last week on the heels of the election, new lows that, mind you, have not been seen since early 2018. It's almost 2021. That's almost 3 years of Forex trading, Pete, that we're seeing some new price levels in.
Yeah, and you know what? I think that we realize that the dollar is an independent asset class, which is great. It provides its own set of opportunities. I would think for some people who are like the euro, pound, which one I pick is confusing. I never really wanted to get into that with all the different tick sizes and everything. So you've got SFX, which is this great, simple way to trade the dollar. But I would imagine if you're watching it and it's like, well, everything else, the wheels are coming a little unglued. Why isn't this moving? And just, I've traded FX for 40 years now. It is its independence and its uniqueness that oftentimes it takes, not to coil, because that sounds like such a technical analysis term, but it will tend to move at a different time. So this is not we've got long SFX, so we're long some dollars right now and a couple of things against it. But this is something that is not what do we call it? One moves, the other moves. There's always is traditionally a lag involved. And once the dollar starts to get a little of its own independent movement, and just be patient around that. I think it's the extreme itself. If you looked at this, Frank, at any other time, you'd say, wow, that is a huge move to the downside. Yeah. We're well below where we've traded the bulk of the last 2 years, which we'd call roughly 150 to 156. We're plumbing the lows. This is an interesting trade. And I think we are both in agreement. It is an interesting trade, but we have to, we're just mindful of waiting for the market to serve it up to us.
Yeah, it's almost like we use sports analogies oftentimes, but I think that's too easy for this one. It's almost like a multivariable equation, where you have...
See, I liked it better that the influencer was unwrapped. This is unwrapping a box of sneakers.
You like the sneaker talk or sports talk. It's a lot easier. No. I'm going to go into high-level mathematics and tell you that this is more of like a multivariable equation here, where you look to stocks and you look to the different sectors that make up the stock market, or you look to stocks' effect on interest rates, and you get a lot of the X happens, and so then Y happens. Whereas here in US dollar, oftentimes it's X, Y, and Z happens, and then US dollar does this. And so there is a little bit more patience. There's a little bit more, not necessarily changing your mechanics because it is a second or third tier trade away from equities, but just having greater patience and looking for some different things in there. Because, Pete, all of that being said, this is a big move. Right. This is a move from 150 down to, it got as low as below 147 for foreign exchange markets. A percentage move of that magnitude, I think about 3% to now like 2-3% there in a couple of days. That is a big move. So, we're talking about how you have to be patient. You have to wait. This was still a big freaking move. And you look at down a percentage point and a half, and we were down, I think, a little bit greater than 2% at the start of this week. So even more than this, but this has only occurred in US dollars, Pete, 2.5% of the time over the last 4 years. And it's usually responded with a pretty consistent bounce when this rarity has come to the table, a nice dollar bounce that we're actually kind of seeing here to start the week. You've seen an average move about half a percentage point off of these big moves lower in SFX. And then the range around that, about a full percentage point. And that would project here for this week, Pete, a close in SFX of 147.60 and a range of 145.5, all the way as high as 148.5. And it's funny because I crunched all of these numbers on Sunday before the markets even opened, before all of the COVID news and everything took over all of this. And we were supposed to do this actually yesterday, but I had to go into stocks because of the COVID vaccine news. And this market now, in that time, has actually come to exactly where it's projected to close this week, which is 147.5 here in SFX. So interesting that finally some of this number crunching and these algorithms that we look at playing out correctly here in US dollar. That being said, Pete, there's obviously more room for it to run higher. It could get as high as like we talked about, almost to 150, and could get as low again as 145.5. I think there's a great trading range around that. And if you want to be long and add some extra room and add some extra time, because you look at this chart here and you say, wow, this market, it's gotten down to 147, but it could get as low as 141, 142, where it was in that early 2018 period. You can look at some short puts in euros, sterling, yen, Australian dollar, and Canada, and that creates that covered call scenario for equities where I buy Apple stock and I sell a call. Here in SFX, it's a little different. You buy SFX and you sell a put in these negatively correlated markets. Out of all of these, Pete, which do you like the most? Sorry, use the superlative there.
Right.
Out
and
of your
you're
options
where we like, which is the yen piece, and we already have that on. And I'm glad you pointed that out, Frank. This is the one where the pairs is long or short. So we realize that. So in other words, if I'm long dollars, but I didn't want to, and conversely, whenever you're long dollars, you're short the appropriate currency or mix of currencies in a basket like we have. You would want to, if you're long SFX and you want to take the yen piece out of it, you would sell the put or buy the future to do so. And I think the yen fall in the last couple of days was very interesting. It was a pretty large fall. We know it was the biggest mover in currencies yesterday. Hasn't gone negative on the day yet, but I think vol and all these currencies, even though they're refusing to kind of move, I would think that I would like the yen piece and possibly the Canada piece. So,
okay.
But you know what? We've diffused our long SFX position with a couple of different trades, and it just gives us a little bit. Oftentimes, these pairs are not for the sake of complexity, but for the sake of time. And both of these have bought us some patience in the idea that this SFX move is moved awfully quickly down to the downside, and we want some time to be long.
Yeah, absolutely. And so here at these multi-year lows in US dollar, there's some room for it to run in both directions. Pete and I are definitely erring on the long side as a reversion play off of these extremes. But if you don't have as great confidence, you can append them with this covered call type of trade, which would be selling a put in any of these markets. I would look around the 10 or 15 delta that might be a little bit different given that yen has moved a lot to the downside. Might be like the 993 strike or around there, but that's where we would look to when trading multi-year lows.